Hi guys, welcome back to Compound and Everything. For those of you that may not have been here before, my name is Chris, and this video is going to be covering easily one of the most debated stocks in the world right now, which is Tesla. Now, to keep things simple, I am going to break this video up into three separate sections. The first is going to be going over the books, the second is taking a look into the company itself, and then finally, I'm going to give you my opinion on where I think the share price is going to go from here moving forward. Now, before I do get into this video, if you'd like to support the channel, the easiest way to do that without spending a single cent is by tapping that like button. And of course, if you are enjoying the content, feel free to press the subscribe button and ding the notification bell next to it. It really does make a huge difference. So anyway, let's get this one started. Now, like I said, we are going to kick things off by looking at their books. However, obviously, this is not a fundamental analysis. I want to make it clear, I am merely showing you the numbers so they're on the table here in front of us. And so we're all aware of what's going on while we're talking about this company. So please don't comment saying,
Chris, this is a growth stock, the fundamentals mean nothing. BitConnect!
Because I get it, I understand. This is just a video talking about the company, touching on the books. This is not a fundamental analysis because what's the point? So anyway, moving on from that, at the time of filming this video, Tesla have a market cap of $396 billion, meaning that at this time, they're actually ranked number 7 on the NASDAQ, coming in above Intel and Nvidia, just to name a couple. Now, when it comes to revenue, they've obviously achieved blockbuster results over the last 5 or 6 years. In 2014, they were producing just over $3 billion. However, in 2019, that amount is nearly $24 billion, which equates to nearly 50% year-on-year revenue growth over that same period. Now, when we move on to return on equity, they are sitting at negative 35% averaged over the last 5 years. Now, like I said before, this is a growth company, and as much as it pains me to just walk past a negative 35% ROE averaged over 5 years, we will just leave it there and keep moving forward. Now, moving on from that, Tesla are actually cash flow positive at the moment, even if it's just marginally, meaning that they're actually receiving more than they're spending. But like I said, it is a very marginal difference in the grand scheme of things. So when we move on to cash, Tesla are sitting on roughly $6 billion of it. However, when we take their debt into account, they've got a net debt position of roughly $7 billion with a book value of $36 per share. Now, this is the point where I'm going to leave the books behind us because, like I said, there's no point talking about the books. Nobody is looking at this as a fundamental investment. Nobody cares about the books. Nobody cares, period. This is a pure speculative growth play. So let's talk about the company and if their idea of what they're trying to do here and the idea of what investors believe this could be worth do somehow align. So I mean, where do we really start here? We've got an absolute genius madman at the helm. So let's talk about Elon Musk for a second. For those that don't know, Elon was the founder of PayPal, SpaceX, and various other extremely successful ventures over the last 25 odd years. Now, Elon definitely has his strengths and weaknesses, as I think we can all agree. However, there can be no doubting that this man is an absolute genius and has done so much work of his own back and brain, obviously. But when you break away all of the noise of the stock market around Tesla and you just look at the company itself, it is an extremely brilliant concept. It ticks so many boxes. I mean, they're producing a more efficient future and a more sustainable future for everybody. And really, at the end of the day, their products are pretty cool as well. So before we get into the stock market side of things, let's talk about the products a little bit. You guys all know how Tesla started. It was 15 years ago when Tesla came onto the market with their Roadster, and the goal was to take that product, try and gain enough funding from it, and then create a vehicle that had a lower cost point that more people could purchase and hopefully afford. And of course, since that point, Elon and Tesla have been extremely successful in their mission, especially when it comes to their most recent product, the Model 3. However, it's not only their car manufacturing division that could cause significant disruption. He also has his solar offering, and personally, the minute I saw this, it just made sense. I thought, why hasn't this been done before? You're taking your whole roof, harnessing the energy from the sun, and then you're converting that energy into a power wall. Honestly, even if you take the cars out of the equation, you have an incredible product here that will most likely be adopted by the masses over the next decade. So other than the idea of a sustainable and more efficient future, what makes Tesla the popular investment right now for people around the world? What is actually causing this stock price to grow so rapidly? Well, I'm going to start by talking about the feeling we get as a client. And I've spoken about this before. In my opinion, this is the single most important thing for any company in the world, which is how your clients feel before, throughout, and after a transaction. And when you look at their offering, the way you purchase and the concept itself, I think it's just the perfect time to have that hybrid between new and old. For those of you that have been in a Tesla, you will know how amazing the experience is. They're super fast, they're extremely tech friendly, and of course they're very safe. So from being able to order your car online, not have to go in and speak with that dodgy car salesman, it's almost like you're doing your shopping at home, like your grocery shopping. If you actually took the monetary value away from that purchase, the two situations would be very similar. Actually, it'd probably be easier to buy a Tesla than it would be to do your grocery shopping online. So the experience is extremely enjoyable as a client. And then you have to take into account just how cool the cars are themselves. They do everything for you. They keep you aware of your surroundings, help if you make a mistake or fall asleep, and also provide an impeccable user interface with access to software and other applications that you just couldn't have in most vehicles now. And not just that, I mean, come on, you can play games and make the car dance for you. Now, of course, by no means is this company in a perfect position, especially in places like Australia. I mean, the Australians watching this video would know that it would definitely have to be something you are aware of if you were to own a Tesla here and try and do a long road trip. I mean, if you're on the East Coast, yes, there are a lot of charging stations between all the major cities. However, if I were to want to go out west or wanting to go somewhere where there wasn't a charging station, I think it would be quite difficult for me to do so. So yes, in that sense, a combustion type engine definitely does have a significant benefit in Australia in a lot of situations. However, when it comes to most day-to-day city users, I don't think this would really be an issue. So I mean, look, we've established this isn't a fundamental investment, and clearly that people are looking at this as a growth opportunity. We've also covered the product itself and how amazing it is. There's really no doubting that. I guess that leaves me with answering the question about the stock itself and if I'm buying it or not right now. And I think, to be fair, this really isn't the case of a simple yes or no. I mean, you guys are fully aware of how vocal I am around overvalued companies and trying to make sure that others aren't burnt or caught holding a very hot, rapidly falling potato. So would it be fair for me to call Tesla an overvalued, overhyped, and rapidly overbought company? Well, if I'm just looking at the stock movement over the last 6 months, then yes, I would say it matches all those points to a T. However, do I understand why people are excited and experiencing FOMO at the moment? Yes, of course. I mean, this is the hardest part about some of these American companies. When you look at them as a new investor, they are actually bloody fantastic companies and probably one day will rule the world. However, if I could just give my 2 cents here, perhaps it might help you in finding some clarity on if you should be buying this stock right now and if that might be right for you. I mean, firstly, we need to look at history, and traditionally speaking, yes, stocks are overbought right now significantly. And I do agree with Ray Dalio when he says here that there are 2 ways that this plays out. We either have a sell-off of securities, meaning that share prices would drop and then come closer or get closer to more reasonable valuations, or we would have a dollar that is inflating. So can we use the inflationary option here with Tesla? I mean, is it possible that Tesla are fairly valued if we were to experience significant inflation over the next few years? Well, no, I don't think so. We need to remember that even though these are great ideas and great products that Tesla are producing, they do not have an unlimited value attached to them. Not to mention the amount of inflation required to create value in a position like this would for the most part be impossible to sustain as a society. Tesla will still face many more growth hurdles in the years to come, like all growth companies have in the past. They'll still have good years and bad years. That's why, historically speaking, events like this are referred to as bubble periods, because they are not sustainable. So as a long-term investor, no, I'm not buying Tesla right now. Maybe one day, but not today. And look, that doesn't mean you won't be able to day trade them or swing trade them. It doesn't mean you won't be able to make money. It just means that you're willing to take on an above average amount of risk comparative to historical data in times like these. So I mean, the stock price could really go anywhere from here, and I mean that literally. It's anybody's guess. However, if you are considering buying right now, just remember that the risk-reward factor in any form of swing or short-term investment is definitely not in your favor, historically speaking. In saying that, if you did happen to get an extra pair of those budgie smugglers, feel free to send them my way. I think I'd look pretty good. Anyway, guys, I'd love to hear your opinion on Tesla in the comments. Are you a holder? Have you considered buying? Maybe you sold out recently. Let me know in the comments below and we can have a chat about it. If you would like to support the channel, feel free to tap that like button. And of course, if you haven't already, may I suggest pressing the subscribe button and dinging the bell next to it so you can stay up to date on all of my future videos. Thanks again, guys. I hope you enjoyed this Tesla review. And if you'd like to see more Tesla videos, just comment below. Anyway, I'll see you guys in the next episode. Cheers.